Good evening, everyone. Welcome to the webinar on EarningsMAX. My name is Hari Swaminathan. Thanks for coming to attending the webinar. Now, we know that we are at the cusp of earnings season. In fact, Alcoa kicked it off yesterday. And then we have JP Morgan and a couple of financials on Friday. And then starting from next week, we have some of the more popular tech names, the bigger ones. Google reports next week as well. So this product is a timely product for this earnings season. So let's get right into it. My name is Hari Swaminathan. I'm the founder of Optiontiger.com. Optiontiger is specializes in options trading, options education, proprietary strategies, and everything to do with options. I have a bachelor's degree in engineering from India and an MBA from Columbia Business School in New York. I've been an options trader for about 8, going on 9 years now. And most of the initial years, at least a couple of years, was very frustrating with options. It takes a lot. It takes learning curve, and until you get the nuts and bolts of it, you're probably experimenting because you think you know what's going on, and actually something comes and bites you. So at Option Tiger, just a brief background. We've sort of covered the education on options in 7 modules. It starts anybody from a beginner all the way to advanced levels. There's 46 courses there. And then once you get the options education, Option Tiger specializes in specific methods, specific trading systems. All of these trading systems come with with an edge to the trader. Obviously, when it comes to options, there's nothing, no system can be algorithmic, fully 100% algorithmic. Meaning, you can have a method, you can have an approach, but you can't reduce it into a complete rule based system, because there are many moving parameters, and so it's you can't have a black box system. So with that in mind, Option Tiger also has proprietary trading systems. The CondorMAX is a fairly advanced system to put and manage iron condors, and of course, if you can do that, then obviously it goes for credit spreads as well. There's two IncomeMAX strategies: the straddle system and the spread system. They are much more simpler strategies, but they're no less powerful. And this year we launched the DayTradeMAX and the SwingtradeMAX system, where in the DayTradeMAX, of course, it's a day trading, it's a short-term trading system, whereas the SwingtradeMAX is more of a few days to maybe a couple of weeks, something like that. But you have the opportunity to make some explosive returns on your trades. The newest product is EarningsMAX, which is just launched this week. And it covers a complete approach to how you would approach earnings season. Now we all know that earnings season, produces some very exciting opportunities, and but at the same time, if you approach the earnings season with a method, then you're obviously, you've got to be prepared for what's going to happen with the stock. And so there are some systems, and we'll get into the details, obviously, in this webinar. And of course, we just launched this, so there's a launch special, and I'll get into that as well, and we can jump into Q&A right after that. Okay, so what is EarningsMAX? Now, in earnings season, there are, all stocks behave, which you probably know, all stocks behave in a sort of extraordinary way, in a very abnormal way. We know that volatility goes through a severe change during, before the earnings event, during the earnings event, and even after the earnings event. And so there are, if you look at any stock, by doing a little bit of studies on how that stock has behaved, you can find, you can actually think of the right kind of trade that might work for the stock. So basically what we've done in EarningsMAX is there are 4 categories of trades. And I'll get into these categories a little later on the next slide. But there are four categories of trades, and within these categories there are more than that. Actually, there are 6 to 8 different trades or different strategies. So whether it's a long movement strategy or a short volatility strategy, whatever it is, those would be the categories. And then within those categories, you have six or more kinds of trades that you can apply. Now, so the advantage of this is, once you've got your thinking around, this kind of a way where, you're thinking about, okay, which category of trade would this stock fit into? And that, of course, goes back to a little bit of background study on the stock itself and how it moves, and, what the volatility patterns are and what its movement patterns are. Then you're able to put that stock into the right category. And so that's really important. And which is the trade that you choose. So I'll touch upon that on the next slide as well. Now, one thing is critical for earnings trades. You have to have a very thorough understanding of how implied volatility and time decay affect the options itself. So obviously there is a very detailed study of this phenomenon, and and that's all part of the product as well. So the first thing we have to do in any earnings trade is you need to devote some time. And we all know that earnings trades can be highly speculative. There's no other way to put it. Yeah, it's really a roll of the dice. The stock can either blast up, blast down, or not do much. But basically, most of the time, if it meets or exceeds the expectations, then the stock is going to blast off. If it doesn't meet with the expectation, even though it might have good results, but if it doesn't meet with the expectation, then it's going to tank. And if it's somewhat wishy-washy in between, then what you're going to see is, it'll probably go down a little bit, but not a whole lot. So you have to analyze the background. And so what kind of information do you need? What do you where do you go get find that information? All of that requires, for each stock, I would say no more than 30 minutes of of research and background study. But in the case of earnings trades, it's very important to do that. It's important to get a good understanding of, okay, what has this stock done? What is its stock going to do? What are the expectations? And what does the general market feel about it? So a little bit of research is required. So all of that is part of the product itself. Show you where exactly to go, what kinds of information to look for. And then, most importantly, out of the four categories of trades, which category does this stock really fit into? Now, again, like we said, the earnings trades are always going to be one of chance. However, chance favors the prepared, and so the more you get prepared for it, the more likelihood, the more of a likelihood you'll have of being successful. And let's face it, if an earnings trade goes well, it can really blast off. So either you're looking for a time decay or a volatility crush, whatever the case might be, in a matter of a day or two, you can produce some fantastic results. So, and then of course, once you fit the trade into one of the categories, then obviously you have to select the trade itself, which strategy you want to put. Of course, all of that is covered. But one of the more important aspects is, okay, which expiry do you choose for this particular trade type or this particular category type? And then what are the strike prices? What are the considerations of how you choose your option? Now, for each of these trade types, you obviously will need to plan for what if it goes against you. After the earnings event or before the earnings event, what are we going to do if it goes against us? Because there is a very good chance that it might go against us. And therefore, for each of these categories, what you'll see is the adjustments are also planned. Most of the time, the adjustments can be simple. In one particular category is the only one where it becomes a little involved with the adjustments may take you for a couple of weeks or so to get back to break even. Because on an earnings trade, if it goes against us, then what we want to try to do is to get to break even. Because obviously, whether we expected movement or we did not expect movement, whatever the expectation was, if it did not occur, then the trade has gone against us, in which case our goal is then to come back to break even. And so that's exactly what the adjustment toolkit is all about. For each of the trade categories, you'll find ways to come back to break even. If not, make a small profit or perhaps a small loss, whatever. If we can, the principle is very clear. If you can manage the ones that go against us properly, the winners themselves will make up for the ones that go against us. But most important is chance favors the prepared. So there is a little bit of preparation involved before you take an earnings trade on any stock. And so that's important to do. It's important to devote that a little bit of time. It's not a whole lot. 30 minutes is plenty for any stock, but it'll help you put the stock into the right category of trade, choose the right trade type, and then of course choose the expiry strike prices, and then also it'll give you time to plan your adjustments in case the trade goes against you. So let's talk about the trade categories. So as we know, there's a huge volatility bump before earnings. So how do we take advantage of this volatility bump? And then right after earnings, we see the volatility crash. So how do we take advantage of the volatility crash? Most important again is which trade is right for this particular stock. So there's going to be some analysis required for that, and so all of that is also part of what you'll find inside. And then of course there is the long movement or the short movement, and then many people sort of disregard what to do after the earnings events. There are some after the earnings events can give us some very good ideas of how to trade the stock, at least until the next trading event, earnings event. So all of that is also covered in the product itself. So what you get is, first of all, a very detailed analysis of the earnings cycle itself, and that kind of a background is important so that you know what to look for, what to expect, and how we should approach the earnings season itself. Then of course nothing can be complete when you talk of options and you talk of earnings reports. Nothing can be no trade will be well designed if you don't understand the complete volatility cycle that every stock goes through during the earnings season. And if you look at the few weeks before the event, there is a very pretty, no, I won't say complex, but it's a very, there's a very, what do you say? There's a very important interplay between time decay and implied volatility that goes on right before earnings, and so it's important to understand that, and so that you know what to expect with each of these trade types. And of course each trade category is explained in detail. There are 4 categories, and then there are 6 or more trades in total that you can use for earnings. So now these 6+ trades, are they comprehensive? Is it all the trades? No, I'm sure you can find other trades as well, but these once you know these 6 trades, you have a fairly comprehensive toolkit of trades to apply for. So when you approach earnings, when you look at a stock and you say, okay, I think this stock will be good for this category or this trade type, and that's really what you want to do, because you want to pick the right trade for that particular stock or that particular expectation that we may have, that the analysts may have, whatever the case might be. But you want to check that out properly. And of course we'll do one sample trade in each of these categories that will also be part of the product itself. Totally you'll see about 15 to 20 videos in the product, just like any other Optiontiger product that you may or may not have seen, but basically about 15 to 20 videos. Earnings season is coming up next week. So the first trade we've already taken is on Google, and you'll be able to see that. And of course, you'll get the sample trades, but the season is just starting from this week. And this week, actually, there's really no interesting stock, that's reporting. But from next week, they all start. So until Sunday, we have the launch special at 50% off. The product is going for $999. You get the complete blueprint. As with all Option Tiger products, it teaches you to fish, and the approach is to teach you to fish. So you get the complete blueprint, so you can be well on your way to designing these trades. The product page is right here. I can just quickly show you that and put it on the chat box so you can check it out. Okay, so that's the product page. There's an intro video there. You can check that out, and then some more details about what you can expect and all of that. And of course, here is at the bottom of the page is the uh, PayPal payment mechanism. It's 50% off right now. So, all right, so that's really all I had for the presentation part. If you have any questions, obviously you can always email me at info@optiontiger.com. Otherwise, now let's get to Q&A. I'm sure people may have questions, so let's get started. So anything on EarningsMAX, or for that matter, any other questions as well? So next week, I think Google is reporting, and then of course, then the Apple, Netflix, all of that comes along. But for the next month and a half is when most of the big stocks report. And so there's all of these stocks actually fall into some kind of a one of these, they fall well into one of the categories. And so that's the important part, to see which one they fall in. Now, of course, granted, on any given earnings event, it's always possible to the to that the stock won't behave like like we thought, or the analysts thought, or and that's very possible. And so you have to be prepared for that eventuality as well. All right, Roger says made 100,000% on Netflix weekly calls on 124. Excellent, excellent. That's the kind of return we would all like to see. Yeah, that's great. I guess you must have bought some very cheap out of the money option, and Netflix blew off. Yeah, okay, that was the one with Carl Icahn. I think he came and made some noise or something the day after Netflix reported, and Netflix went down, I think, $90 on that. Or was it? I don't know if that was the one or the one before that. Do you use any indicators? No, not really. I mean, because earnings is not a technical pattern trade. It is not a technical pattern trade. So you might use indicators just to get a feel for what the levels are, and all of that. But really, it's not a technical trade at all. So no, you don't use. I mean, you basically, the parameters that go into an earnings trade are, you're going to look at volatility, you're going to look at time decay, you're going to look at movement. So those are the primary considerations for an earnings trade. So and some of it is, of course, historical approach. So you need to look at what the stock has done before. However, that doesn't mean that it's going to do it again. And the so you'd have to prepare for what happens if that movement doesn't work. Do you know how to follow the smart money? Yep. Well, before or after earnings, it's, yeah, I mean, you can, there's several ways to do that. You can look at obviously volumes and everything. You can look at the open interest, but of course, these are tools that anybody has. I don't have any proprietary method. Daniel, yes, non-spread capable. You could do perhaps a few of those trades, but in general, you would want to, you can do a few of those trades. Let me just think of the trades and I'll tell you. Um, but not being able to do a spread is a disadvantage for sure, not just for earnings trades but in general itself. So for earnings trades, you can probably do an earnings trade, and if you wanted to hedge it with a spread, you won't be able to do that, obviously. And then the what do you call and then if you wanted to adjust the trade, if it goes against you with a spread, you won't be able to do that. So those are the limitations, obviously, but there are trades you can take that will but you see but I agree, I mean, it's not a whole lot. You'll be boxed into one or two types of trades, and obviously you don't want to get boxed up like that, because yeah, you want to have the flexibility. So yeah, if you're not able to do spreads in your account, I would say you will be pretty severely handicapped. All right, Roger says look at 10K trades 3 days before earnings. Yeah, good point. The That's one way to look at what the smart money is doing. You can also look at volume buildup, right? Basically the same thing. Before the event itself, you can look at open interest and which way the open interest, where is the most open interest concentrated. So that's also another way of looking at it. Yep, sure, Daniel. Netflix is always an easy strangle, 10 to 20% out of the money, 90% winners. Are you talking of a long strangle or a short strangle? I think you mean 10 to 20% out of the money weekly. Yeah, no, I know. But are you buying the strangle or are you selling the strangle? I think you mean buying the strangle. So either, yeah. Okay. Yeah, buying. Right. Okay. So, yep, that's it works. But, it'll work. Like I said, there are some stocks that always move quite a bit. So a particular trade, type of trade is good for that stock. However, having said that, you'll always run into that one time when, it may not make the move that you expected, or it'll do something weird. So I mean, that's just the nature of earnings trades. It is sort of speculative, but the good thing is, if you approach it from an analytical standpoint, even if it doesn't do what you expect it to do, you can still come out ahead. And so, some of these trade types are those kinds where, even if you think that whether it's a long movement or the volatility crush or whatever the case might be, the you can still come out ahead. Right, right. Yeah. Yeah, market maker expected move, but market maker expected moves are almost always wrong. And of course, they also take some kind of a educated guess, and we go with that, and we base our strategy based on the expected move. But many a time these expected moves get burnt, and it sometimes they're pretty good, but most of the time they get burnt. Yeah, Daniel, it'll be difficult to fit these earnings trades if you can only do long calls or long puts. It will put you in some kind of a disadvantage. You can probably do the trade. Where I see the issue coming is, if you, after the trade, if it doesn't go in your favor, then almost always the adjustment mechanisms would involve a spread of some sort. And so if you get into that part of it, then it might be an issue there. You can still do straddles. Yeah, you can still do strangle straddles. But when you want to adjust, exactly, that's what I mean. So you can still do strangles and straddles, but if something goes wrong, then obviously the adjustment is the issue there. Yes, the courseware is available right now. It's all ready. The sample trades are the only one. I'm wait because some of these trades have to be put on the just before earnings. Some of it will be put on the day of earnings. Some of it will be put right after the earnings event. So all of that obviously. So the sample trades is the only one that's left to do, which I'll be adding to the courseware as we approach some of these stocks. So next week is Google. We'll have one or two trades on Google, and then whatever comes after, I think Apple and Netflix and all of them come right after that. So we'll be analyzing the stock and which trade fits for these for these stocks. So we'll be doing all of that. But yeah, the basic courseware is available right now. Are there any stats available for this system? It's not a system, Nitin. It's a playbook. It's like I say, it's like a blueprint of how you approach earning season. Okay, and once you get the blueprint, then it shows you the kinds of trades that will work for the kinds of situation meaning the stock, the volatility, whatever. It shows you that. So it's not a system per se. It's a playbook. It's a complete analysis of the earnings cycle. It's a complete comprehensive approach. It's more of an approach rather than a system. Because many people take earnings trade. I mean, earnings trades are very, very popular, and for good reason, because if they work in your favor, it can be a blockbuster. And so many people take earnings trades, but I don't see, at least so with many discussions that I've had, I don't see a very methodological, a structured approach to these trades, and that's what this is all about. These are approaches that I've taken in my own trades, obviously, over many, many earning seasons. And so what we've done here is just sort of crystallize all of that knowledge and taken a deep dive into what happens to options, what happens to earning season, during earning season, before, during, and after, and what is the right way to approach it. So that's really what it is. Yep, sure, sure. Okay. So next week Google starts. So if you get this system, you'll be prepared. You'll be seeing the sample trades also that would be part of this. And as you go through this earning season, and it's not particular to this earning season. It's obviously the what you learn is applicable to any earning season. So you'll have this particular toolkit in your hands all the time. So all right, let's see. Any other questions? This will be recorded, yes, and I am recording it right now. So if you joined late, no problem, you'll get the recording. If you've registered for the webinar, you'll get the recording probably tomorrow morning. It takes a little while to render the videos, but you'll get it by tomorrow morning. Yes. Okay, so any other questions? Looks like everybody's clear. Okay, if you think of any question, please feel free to email me at info@optiontiger.com. Anytime you have a question, just email me and I'll get to it. But otherwise, thanks for coming. Thanks for attending the webinar. You'll get the recording hopefully by tomorrow morning. You should have it in your email, and look forward to speaking with you again soon. Thanks. Bye bye.